You're watching The Wave. I'm Frank Kanshi. Is set to get imposed by 36% tariff from the United States. Thailand is facing its GDP growth to contraction in the second half of 2025. To balance this economic outlook, Thailand's government plans to provide stimulus to bolster the economy. But is that pragmatic to help Thailand's economic growth? Joining me now is Dr. Kirida Bhaopichitr, Director of Economic Intelligence Service of Thailand Development Research Institute. Ajahn Kirida, thank you for your time.
You're very welcome.
Yes. Actually, of course, I talked to you so many times about Thailand's economy, and now we're still facing that 36% of tariff. Of course, Thailand's government right now is trying to negotiate to lower that, but now, according to recent rates, what does that mean for Thailand, as in our rates are higher than our peers?
Well, that actually means that goods in Thailand that are exported to the U.S. will be more expensive, right, relative to what our peers or our competitors are being taxed if the new tariff actually goes through as it is. But of course, we still don't know what the final tariff that Thailand will get. But I still think it would probably be in the range of 20 to 30%. So we will still face a tariff rate that is higher than many of our competitors in the region. So that would probably mean that if the goods that Thailand sent to the U.S. are competitive only based on price, there would be a disadvantage for Thai products. But if the goods that are sent to the U.S. have other features that are attractive other than price, and I'm talking about things like jewelry, which is also one of the top 20 products that we send to the U.S., right? That might mean that people will still be willing to buy jewelry, even though the price might be a little higher than other countries that export to the U.S. because our craftsmanship or our design is different. So again, I would say the impacts have to be analyzed carefully depending on the products and also depending on who our competitors are.
Right. Of course, you said that Vietnam, right now we see 20% tariff for Vietnam. Thailand, we might be able to lower just over 20%. So how do you see that power struggle in the region too, in terms of tariff? Does that mean that FDI will go to Vietnam rather than Thailand? What do you think?
It all depends on the product, as I mentioned. Not all Thai products are competing with Vietnamese products. As I mentioned, like jewelry, Vietnam is not our competitor in that segment, or there are many other products that are actually not produced in Vietnam as well. And it also depends on the supply chain as well. Because I know for many industries, like the car part industry, for example, the supply chain is here, right? So relocating to Vietnam might not be as efficient, even though the taxes that Vietnam will be charged by the U.S. is lower. So I think it depends on the product, but of course overall, if that product is very similar, the supply chains are also present in both countries. Of course, the lower taxes or the royal tariff in the U.S. will have an impact, right? That might make investors decide to invest in Vietnam instead of in Thailand. So it actually depends on the product itself.
So it depends on the sector and the supply chains too.
Exactly.
Depends on where the supply chain has been established in each country.
Exactly.
Another point I think we have to talk about, I think, is Thailand's measures to really mitigate the 36%, I would say, crisis at this moment. Of course, as what you said before, we have to look at non-tariff barriers to how to negotiate with the United States at this moment. And of course, according to Pitai Chunghawachira, our Minister of Finance, say that we might open particular sectors or products for a 0% tariff for U.S. products to come to Thailand. And what about other pragmatic measures you would recommend?
Well, I think the impact of these tariffs are twofold, right? One is our exports to the U.S. will face difficulties, right, as we have discussed. But the other side is that we would have to open some of our markets to U.S. imports as well, right? So on that front, I think, of course, we will have to prepare ourselves, right, for the imports. If we lower our tariffs for U.S. products, right, down, that means that there's a greater chance of U.S. goods, being sold in Thailand because they're going to be cheaper than before because the tariff rates are lower, or maybe because we expand the quotas for them, so there will be more of them. So I think the pragmatic approach here is that, of course, there will be sectors that will be affected because they're not as competitive as the American products that might come to be sold in Thailand.
Yeah.
So I don't think this is a short-term measure that we can address immediately. Of course, one is that we can, in the short run, we can probably support, the government could probably support the industries or the farmers that are being affected. But I think this is a more of a structural issue where I think we need to step up our competitiveness in both these industries and also in these farming products, so that we can be competitive. But in some products, we might just not be competitive because our cost is higher or we don't have the technology. Then, of course, those sectors might need to be adjusted or transformed to do something else. So I think the assistance that the government will be giving to these sectors, industry or farming sectors, should not only be money that's given to them, but it should also be an upgrading or a transformative fund that would help them transform themselves to other competitive sectors.
Yeah, and actually this is what Pichai already said, that Pichai would talk to state-owned banks to give around like 200 billion baht for SMEs and agricultural sector too. But as what you said, not just money, it's about upgrading too. Another part that we have to talk about actually is export industry, because they are at the front line to receive that impact. And according to Thai National Shippers Council, they say that actually in July, we might see 30% decrease year-on-year basis. Although we already see some expansion in the first 2 quarters of this year. So what do you see about export industry right now? Because this is a very huge impact to them.
Yes, I think the exports, as you mentioned, have been mostly front-loaded, right? And this is not only to the U.S. This is also to like China as well, because again, there are many supply chains around this region which produces and then export to the U.S. So we're facing not only direct exports but our indirect exports as well, right? Has been front-loaded to the first half of the year. So I'm not surprised in the second half of the year, exports would fall, right? Would fall year on year or even quarter on quarter. So overall this year, I would say that export growth might only be maybe 1%, at most, because it's front-loaded, while the second half of the year we'll probably see a contraction, right? So yes, it will affect our exports, particularly those to the U.S. and those that are indirect, meaning there are parts that are sent to the third country, which assembled and then sent to the U.S., right? But I still think that going forward, of course, we will have to diversify, right, our exports later on to other markets as well, and there's hope for growth in other markets. For example, next year we'll probably have the Thailand-EU FTA, free trade agreement, that will come into effect. That will help us expand our Thai exports to the EU market, for example. So we'll have to watch and see, but I'm pretty sure that the exports for the second half of this year will probably contract vis-a-vis the first half or even year on year.
Given that you talk about free trade agreement here, because of course, right now Pichai and the finance ministry really trying to open partial market for U.S. markets to come in. One concern is that they don't want to affect FTAs with other countries too. To what extent you think Thailand can really open the market to the U.S.? Do you think there's some impact to agricultural sector or other sectors in Thailand too?
I think there will be an impact, but according to Kun Pichai, right, he did mention a few criteria when we submitted our proposal to the U.S. as to which products we will open our markets to. He said, one, our products that we don't produce enough in our country, right? Or two, there are products that the U.S. actually are not competitive in. For example, like raw silk, or things that even if we open, the U.S. will not have enough goods, or they're not even producing those to be exported to Thailand. And third, of course, he said he would not open sectors that will actually affect Thai farmers or industry in a very big way, right? But But all in all, I still think there will be some impact, of course. But again, the coin always has two sides, right? Let me give you an example, right? Corn, for example, right? Maize, which is actually used for animal feed. At the moment, we don't have enough production in Thailand, so we need to import. But we have import quotas. Right, so again, that makes maize expensive, right, in Thailand because we have a limited, quota. Opening it up for cheaper U.S. maize to come into Thailand, of course, will hurt domestic, corn, right, farming, households, which is around 140,000 of them. But remember, that would lower, right, the cost of animal feed, which means that the cost of meat will be lower, so consumers will be able to consume, cheaper meats here in Thailand, and we might even have a chance to export, right? So again, the coin has two sides. So I think they're trying to balance, both sides.
Right, balance is the key. But right now we have to actually estimate that Thailand's GDP might get impacted too in the second half of this year, as in, of course, we see some data already, about that GDP contraction in second half of this year. Of course, according to Gasigon Research Center, whole year GDP growth might fall to 1.4%. Is that a warning call, or is that a very bleak number for Thailand too? What do you think?
Well, I think that's not surprising, given that the second half of the year, our exports will probably contract, right? And of course, tourism is not growing very quickly as well. So those two main engines are not there. Private consumption is also going to be weak, given that the incomes from tourism and exports are weak, right? So we might see a little bit more of private investments and government investment. But again, for the private investment, many are also waiting to see what will happen. So the actual money, flowing into Thailand might not be very big. So I'm actually not surprised that for this year, the whole year, we will probably see like a 1.4% or 1.5% GDP growth. The thing is that how fast can we adapt, right? If we can adapt quickly, then maybe next year we would see a higher growth rate. But if we can't, then we would probably grow again at a little above 1% next year as well.
But some people actually, some economists or analysts, they also said that because it's we see sudden changes in governments too, it doesn't really push forward consistent policy to really bolster the economy, to boost the economy to another level. So do you think, what do you want to see about Thailand's government's policy right now in terms of tourism, as what you said, one of the main drivers for our economy? What can Thailand do?
Well, I think we really need to upgrade, as we mentioned before, in many sectors, right, including the tourism sector as well. Right? We have been used to a lot of mass tourism for many countries, right, around the world. I think maybe it's time for us to now maybe target and maybe move the tourism up the value chain, to be more maybe medical tourism or other sports tourism. Right? So there are many kinds of tourism which is higher value added and might attract higher income rate tourists to Thailand as well. So I think in many of the sectors we will probably need to upgrade our skills, right, our performance, and also maybe think strategically to diversify as well.
Right. According to that, of course, we talk about the outlook for Thailand's economy, no matter its second half. Actually, World Bank also warned that Thailand's economy outlook is not that great, it's not that bright. So, Ajahn, right now, of course, amid no matter political instability, trade tariff, trade tensions on the global stage too, what's the opportunity, the very important opportunity for Thailand right now in the second half of this year and next year too?
Well, I still think there are opportunities here because when I look at the Board of Investment, investment approvals and also applications, there's still a lot of interest, right, in investing by foreigners in Thailand. Therefore, that means that there must be something that they see in Thailand. Of course, I would say now they're in a wait-and-see position because of the tariff issue. But at the end of the day, as I mentioned, tariff is not, it's not the only thing, right? So there are sectors that, for example, on the service side, which Thailand is strong as, for example, the wellness sector, right, which we are pretty strong strong in Southeast Asia, and there are very few competitors here. Anything to do with hospitality services, we're strong there. Biotechnology products, we're also strong because we have a lot of agricultural base here that can be added value with biotechnology. For example, I'll just say like plant-based proteins, or even cosmetics, vitamins, or even bioplastics, for example. So those are things that actually we can produce, and we have a competitive advantage too, and they can be exported as well, right? So I still see many sectors in Thailand that we have a competitive advantage. And remember, there are also other things like infrastructure in Thailand. It's not bad. I mean, compared to other countries in Southeast Asia, right? If investors would like to move to Southeast Asia, right, we are actually pretty decent on our infrastructure: road, rail, ports, right, airports. We're okay. Electricity, water, it's stable. There's enough of them. So, again, I think there is some opportunities that lie. And last, I just want to mention that the fact that Thailand has tried to maintain itself in this geopolitically intense world as being more or less neutral, that also helps attract investors who maybe would like to invest more in countries that they view as their friends, right? So these are things I see as still opportunities for Thailand to grow in the future.
And amid, of course, right now is a very fast shift of that global supply chains to Southeast Asia, to Thailand's actual infrastructure is what you talk about. Electricity, very stable here. And of course, geopolitical friendliness, I would say that in neutral point, so that Thailand is still one of the best locations for foreign investor to come to put their investment and for long-term development, I would say that. Okay, right. Today, I think it's very good to talk to you in person, Ajahn Kirida, and get your sense. And we will watch, and we'll be watching tariff development very soon. And 1st August, the deadline for us too. Right, so Dr. Kirida Bhaopichitr, Director of Economic Intelligence Service of Thailand Development Research Institute. Thank you for your time, Ajahn.
Thank you ค่ะ ขอบคุณค่ะ
Thank you.
สวัสดีค่ะ
More news to come.